Welcome to Lock in Your Success. We are the company that creates strategies to build wealth. This webinar reviews real-time hypothetical trades each week while analyzing market conditions with adjustments. Questions are always welcomed, asked, and answered. Before we get started, we need to go over our disclosures. Locking Your Success LLC is not a broker-dealer or financial advisor. This presentation is for educational purposes only. This information is not an offer to buy, sell, or hold securities. You shall be fully responsible for any investment decision you make, and such decisions will be based solely on your evaluation of your financial circumstances, investment objectives, risk tolerance, and liquidity needs. Please visit cboe.com to find and review the options risk disclaimer prior to placing any trades. Also, please note that these are real-time but hypothetical computer-simulated trades and results. The trades are believed to be as accurately presented as possible, however, they are not guaranteed as to accuracy and therefore live results may vary. No representation is being made that any portfolio will or is likely to achieve profits or losses similar to those shown. Whew! Now that that's over, let's get to it. Here is your host, John Locke.
Good morning, everybody. Welcome to Options Trading for Income Weekly Update for November 23rd, 2015. If you're watching this on YouTube or some other venue, then come on over to our website at lockeinyoursuccess.com. That's L-O-C-K-E, inyoursuccess.com. Join our mailing list, get your free report, the 7 secrets to becoming a successful trader, and make sure you sign up for this free weekly webinar. Speaking of signing up for the webinar, please be aware that we will be switching over in December to a members only, and it's going to be a different webinar series that everybody's going to have to re-sign up to get there. I'll just quickly show you. You come once you join the community, which I should probably show you that as well. If you go to lockeinyoursuccess.com, freebies and more, Lock Options Community, you can go ahead and join that under that page. And again, basic membership is free. And once you become a member, you can sign in here in the community. And just so that everybody knows, there's a bunch of videos here on actually how to use this, because it has an awful lot of functionality. And so you can also review those. But to sign up for the weekly webinar, it's right here, weekly webinar. And please make sure you sign up for the new one. That way you won't miss anything. And also, while you are there, check out our trading programs. We have the super simple spread trades, the M3, the bearish butterfly, the Rock, the M21, and APM squared. And now we also have a new product that's been added on, which is the Masterclass series, which if you come to our website, you can check that out as well. So moving forward, a little bit about this update. We cover 4 of the trades within some of the systems that we sell. We cover the bearish butterfly, the M3, the Rock, the V Condor with real-time examples of the systems, and we just follow them according to the guidelines and post the results, which we'll be posting today for November. Special announcements this month. Starting in December, again, we are moving over to the community members only, so make sure you do that for the webinar, for this income webinar. Also, Successful Trader of the Month options webinar is tomorrow at 9 a.m. Eastern Standard Time for community premium members. So if you're a member of that, make sure you sign up for that early. If you try to sign in too late, you may not get in. So, just go ahead over there, make sure you sign up for that early. Also, I had to put in here, Happy Thanksgiving to everybody who celebrates Thanksgiving before I forgot. So make sure everybody has a good Thanksgiving. Should we have received a confirmation of a sign up for the new webinar? Okay, I'm sorry. Yeah, and Sherry has answered that. Yes, if you've signed up and you've not received a confirmation, please email Sherry at lockeinyoursuccess.com. Okay, so that's good to go. And again, tomorrow we're talking with Mike Schwartz. He's been 100% plus yearly returns 2013, 2014, and thus far this year, trading his variation of the mighty bearish butterfly, which is a little cool thing that he's done with that. So make sure you sign in and so that you can see that. All right, let's take a look at what's going on. So last week I was talking about the market being at a decision point. It was likely going to come down to 1140, and then direction from there we really didn't know. It was just, like I said, one of those decision points. Obviously, the market has chosen it wants to go in the up direction. So that being the case, my expectations going forward would be that this is going to work its way up to 1200 in the next, either this week or next week. And then it's going to be at another decision point. But that's the most likely movement for this. The things we have to watch for an early turnaround before 1200 are the SPX reaching 21/21. In other words, if the SPX starts drastically outperforming the Russell and reaches that before the Russell hits the 1200 area, we may get an early reversal. Another thing we want to look out for on the Dow is we're already there, right, which is part of the reason for the pullback late on Friday, and we'll see where this goes today. But if we were to break down underneath this 17.6 area here, that would be a signal for an early reversal on the Russell. And as far as the NASDAQ goes, we are at a potential reversal point here, which is we had a previous high, we had a breach of that high and a failure. So that makes this a smaller resistance level, which again, not surprising we get a down day today off of that, or at least in the morning off of that. But I would expect this is probably going to try and retest the 47.50 area. And depending on how fast it goes there, again, we may roll over a little bit early. But other than that, I'd expect the Russell to run up to the 1200 area and over the next week or so. So that's what I'm thinking. As far as the markets go, pretty simple analysis today. So let's just switch over to our trades. So last week, it was obviously expiration week, so everything in November was either closed or expired. If you remember last Monday, we were talking about the November M3. It was only up about $3,000, but we had a huge gain in this position on Monday. By Monday afternoon, at our checkpoint time, we were actually well over our profit target. So therefore, this trade was closed on Monday for a profit of around 12%, which is a little higher than normal in an M3, but that's what the market gave us this month. So good trade for the M3 this month. So that is that. So that was just simply closed on Monday afternoon. We also had a rock trade going on. If we switch over to that position, actually, let me show you, I'll show you the T-log for this because people like to see that. Right here.
Just a quick note too that the T-logs for November expiration have been posted onto the resources page. So if you're looking for those, that's where they are.
Okay, right. Okay, so you guys can go to the resources page to see those. Can I show this just before expiration? Well, I didn't expire it, so if I go here, this is where we closed it. So this is closing, right? So this is the closing day. If you want to go a half an hour previous, we can do that, right? Because we want to check our previous and after time frames to make sure that we're actually getting what we're looking for here. So, okay, and you want to see the expiration graph. So there's what our expiration graph looks like just before close. So we ended up right nice in the center of the position near expiration. And hopefully that is what you were looking for. So here's your expiration graph just prior to close. So moving forward, let's go to the November. Yeah, really nice. It came out really nice this month. Yeah, beautiful. All right, so let's go to the rock trade. The rock trade was a little more challenging this month. But the thing is, I really love when this happens because for demonstration purposes, it's really quite nice. So this is what we looked like in the rock trade on Monday. If you remember, we started out in an M3. We pushed into a rock trade right at the top of the market. Then we had a hard pullback. We had to get kicked back all the way back into an M3R position that looked like this coming into this week. Now, at this point here, from M3R guidelines, we are actually over our maximum delta point here. So we just did some verticals, just some 1140, 1150 verticals just to flatten that out. So if you close this out, We did 3 of those, brought us down to about 58, and we look like this. So that is the rock position coming into there. Then on Wednesday, the market actually shot up. So let me just undo the adjustments here, move into Wednesday. Right, we shot up into here, way positive vega. Negative delta is way too high. And we end up in a position that looks like this. Now, this is a situation where you could either try and fight this, which you certainly could have done, right? We could have come in here and essentially pulled out just some of the middle here. We could do like +2, right? And then actually you could have even just done that. Yeah, see that doesn't look nice either, right? So then we would add more negative delta by, right? This is really a little bit, it's one of those kind of holes in the guidelines where you could do something like this if you wanted to, right? Try and support yourself for the next day. Realistically, I wouldn't recommend that this close to expiration, so let's close that out. My other only option here is to roll up. So it says just take this position and roll a little bit higher. I could have done that as well. Either way, I'm 2 days to expiration, and this is going to require, since the minor stuff I'm playing with here isn't working for me, right? This is either going to require a major adjustment here, or I can just exit it, in which case I decided just to pull the trade off. I would imagine we probably could have pulled around 10% out of this. I think there were some people who did pull in the 10% range out of this trade this month, pulling it right into expiration. Certainly possible, but for the most part, you know, a lot of times I'm not going to bother with that and just close it off. And that's what I did. I just ended up closing the position down. And we did it for a profit of around 4.9%, which is low for a rock trade, but again, it's just not worth fighting sometimes. So we close that out. All right, so let's, and it's just a comment. I got 10% somehow on my first rock campaign, which is reasonable. Not sure how I did it. I have to replay it again. Yeah, because it was like I said, this was a challenging rock trade, but it was a very good one to be in live trading because you got to see most of the configurations in the trade, and just a lot of fun to deal with. So it's amazing how dynamic the system is for something that yields such a high amount when it goes well. So really liking that. All right, so here that was essentially the rock trade. So this was just closed out right here. Again, there was a T-log of the close. Let's move on. November V Condor. This was just expired. So if we take a look at this chart, here is what the position had looked like for, I don't know, the last couple of weeks. And I think 2 weeks ago when we did this, I said the most likely outcome of this was to expire it at a profit of, let's see, about, well, this is wrong. It's not 13,000. Option view must have missed an option here or something. Yeah, it did. It lost my put options. Let me get back up a little bit. See if we can get those back. Yep, they're back now. If I run forward to Friday, actually to Thursday, right, this should give us a better number now. No, it didn't. It lost him again. Well, suffice it to say, it was about a 2.6% profit, about $1,330 is what we expired at. And again, the graph looked like this, except it was down in here somewhere. But that was, and that was the V Condor, and that is all of the trades that we have as far for November. As far as the results thus far for the year, we are almost at the end of the year. So with the bearish butterfly, remember that was closed early. at a reduced profit target, 12.7% for a yearly total of 138.8, which is nice. We also have M3 trade, which is 64.2, which is about average for this trade in normal market conditions. Somewhere between 50 and 70 is normally what I would expect out of something like that. Again, we have some better years, we have some worse years, but in general, that's what I would expect. Rock trade is about 114, which again is pretty much on task for what I'd expect. And the V trade, because of the choppiness in the market in the last 3 or 4 months here, is it's down from where it normally is, but still a very, very respectable showing here at 36%. So nice results thus far this year. We'll see how December goes. I would expect it to do fairly well, and we should round out the year really, really nice here. So that's where we sit this year. So let's take a look at what we're in for December and the entries that we did for January. So let's see, we had a rock trade entry, and then we'll talk a little bit about option view because we got some questions on that too. So let's see here. We have a rock trade entry, December rock. This did not meet the criteria for a rock entry trade. The delta was too flat, and therefore I went into an M3 at 1140 strikes. I did 8 1140, 1150 verticals and 2 1140, 1160 verticals. Added a call here at 1050. Gave us a position that's running about -9 delta, and looks like this. So the game is looks a touch high, and again, that is going to be due to the option view issues that we're having right now, and we'll talk about that in a little bit. But nice looking M3 entry for the rock trade right here, and that's what we're starting with in December. Also on Friday, we had entries into January positions. We had our January bearish butterfly trade, which I entered with 1150 butterflies. We had a -87 delta, which is fine, 83 theta, so nice delta theta ratio, about 972 for our price per butterfly. Just a nice entry for a bearish butterfly. So that looks nice. We have our M3 trade. Actually, I'll show you I don't want to go too fast on this for you guys. Whoops, I don't want reports. I want T-log. So there's a T-log entry on that particular trade. We're in the 1100, 1150, 1200s, and we're off to the races. We had an entry of an M3 trade. Again, our delta being a little flat, I was able to go into 11 butterflies. So straight butterflies for the M3, 56 days to expiration. I did 11 of those, and I did one 10-20 call to put us into slightly negative delta, a position that looks like this, and a T-log that looks like that. Again, that's our entry position there. We also had an entry for a January V Condor, which essentially is going to look like this. We did 10 delta shorts at 1160 and 1260. I'm sorry, 1060 and 1260. We had 30-point wings. We had a straddle here at 1160. Looking at the T-log, that is our entry position here. And looking at our analyzed graph, this is what it looks like here. So everything's going fine thus far there. And oh yes, December trades. What did we do with our December trades? We have had no adjustments last week. We didn't get enough market movement. So here, but we'll just show you where we sit. So here for December, this is what our December bearish butterfly looks like. We have shorts at 1160 and at 1180. Our position looks like this. We are up about $7,900. And just a really nice looking position here. The market does, as long as the market doesn't take off on us too hard in the next, by the end of the week, we will be exiting at a reduced profit target, or if it even stays, we may end up exiting actually at full profit target, depending on how nice the market is to us. If it really takes off to the upside, of course, anything can happen at this point. It's possible to still take a loss. We'll see. But it's not very likely here, very, very likely that we'll do fairly well in this trade this month. We also have our December M3 trade, which again had no adjustments. It's kind of at a borderline adjustment right now. It's minus 56 delta. We are outside the tent. Technically, I could have done a very, very minimal adjustment to this. Watching it earlier in the day, we were bouncing around minus 50, so I just left it. And today, if the market doesn't come down, then this will be adjusted to the upside. If the market does come down, then we'll probably end up leaving it alone. So that's what we are with the December M3, and we also have a December V Condor, which is also doing fairly well. It's up 26.50 and looks like this. Again, no adjustments on anything this month, and that is what all the positions look like. So I'm just going to turn this to some questions here. First is a question with Option View. I plan on actually doing some sort of a video of Option View, probably sometime this week or next week, that will be posted in the members forum for basic members, because it applies to everybody. So, or it may even be on our blog. We'll see. But I am planning on doing something with that. Now, obviously, the modeling from Option View is different than it was before. And we're getting some further than normal variations of the dot from the T+0 line. One thing that concerns me more than anything is we're getting some variations in profit and loss that I think may be off as well. So, but we'll do the best we can in our trade examples. We're just going to assume they're correct. But we have been getting some variances there, just so that you're aware of that. The differences in the Greeks in the variable setting, which is a setting we use, are, like I said, they are different, but they're within parameters of the trade. So in other words, these trading systems, every one of them that we're going over here, they're very, very versatile trading systems. They work well in a very wide variety of conditions. The current, if you're running right now with the model that we've always run to do the trades, you're going to be running a little bit more negative delta than normal. Well, let's look at an M3 trade for an example. M3. We're actually running a little bit more negative delta. It's posting a little bit more negative delta than normal, which is right here. Back here, it's going to be posting a little bit more positive delta than it should be. In the middle, it's going to be generally fairly correct or I hate to call it correct, but more like the old model. That said, we were using the old model of Option View because you got, how do I word this, the most consistent results in the widest variety of conditions using the settings that we had before. You don't always get the best results in all conditions using the delta numbers in that model, but you get the most consistent results over a very wide variety of conditions, if that makes sense. There's an important distinction there. That said, the differences in this model from the last one are not going to significantly impact the profit and loss in any of the trades for 90% of the conditions. It's just not going to really make a difference. There's going to be certain specific conditions where it might, and those conditions are if we get a 2013 type of environment where the market just keeps grinding up. Using this model, you'll actually do better than with the old model, mainly because it's actually showing more negative delta, so you're going to adjust faster for an uptrending market. So that would be a benefit there. In a choppy market, especially with harsh down moves, this is going to be a little bit more problematic because it's showing us a little bit, you're keeping your delta flatter than normal using these guidelines, using these analytics than normal. So in certain specific conditions, as in, you're adjusting to keep your delta as flat as to the minus 50 to the upside by being really on top of that, it's a little bit detrimental in a choppy environment. So you can choose to compensate for this, or you can choose not to. On the sample trades here, I'm choosing not to compensate or make any difference. I'm just going to come in here. We're going to trade these by the guidelines using the model as if it's perfectly fine, and the trades should be fine. There should be no issue with them. Like I said, there's going to be very specific circumstances where there might be, but it would be unusual for that to happen. So that's what I'm doing here. In our live trading, I am making a slight compensation for it, and essentially what I'm doing is I'm looking at this model, and I'm looking at every individual option on its own model and comparing them. So this is what the every individual option on its own model is showing you compared to our variable model, right, which is showing us with a little bit more upside risk, which I do believe is present, by the way, but not quite to this extent. But it's also showing us less downside risk, or that we're going to gain. Again, that's where we are going to gain value probably if this drops, so assuming the volatility remains fairly the same, but we're not going to gain this much. Right, so it's a little off on the downside as well. And you can come in here and you can average between the two models. You can say, okay, this here says I'm running at minus 56 delta. This model here says I'm running at minus 6. That's 50 delta difference, right? So realistically, I could treat this like I'm around minus 30, right? It's not an exact science, so it's not so. I can decide to treat this at around minus 30. It's going to be a little bit more consistent over a wider variety of conditions that way. I'm not going to adjust to the upside as fast. So it's just making that minor compensation. You can do that in your head and deal with that. And I would do the same thing on the downside. It gives you a little bit more aware of what's going on with that. I would not use this model by itself. This model by itself is often very far off, especially when it pertains to what you have for upside risk and what you have for downside risk. Sometimes it's on spot, right? So what I'm saying is, due to the unpredictability of what this model is going to show you, I tend to avoid using it exclusively. But if I average it out between the variable model that's kind of overreacting and this one that kind of underreacts, you can get a good idea of where to do that. So that's what I'm doing with my more live positions. There is also out there of using the Thinkorswim SMILE model. So if you go to Thinkorswim, and I think I mentioned this, I don't know if it was on a trade update or something else, but right, this is my this is a live position that I have on here. I can run into setup, application settings, general, let's see, I don't remember even where it is, but I can come in here and look for, I go into display, and again, this is essentially the same as the EIOIO model in option view, and I can come in with a SMILE approximation model here and apply it, and I'm going to get a different set of a different T+0 line, which is going to more mimic the option view T+0 line. The problem, one of the biggest challenges people have with the SMILE setting in Thinkorswim is that their profit and loss is going to be off. In other words, your profit and loss in this is not accurate, because Thinkorswim is measuring your profit and loss off the T+0 line, and when you're in the other setting, because it's using actual options volatility, your profit and loss is pretty much actual. Here they're using combinations of volatilities and calculating them differently, and you're going to get the T plus 0 line is going to be different than what your actual profit and loss is, which is why in option view you actually have a dot that's separate from your T plus 0 line a lot of the time, right? Because of that. And in option view they'll separate that. Here they do not, and it causes problems with your profit and loss numbers. But you can also, this is just another tool to analyze your Greeks. I played with this Smile projections in Thinkorswim for approximately 4 months back in 2013 because to help keep people so that they could maybe stay out of option view and not spend the money. I did find the Smile to be a little bit unpredictable. In other words, there's periods of time where it reacts very, very much like the old option view model, and there's periods of time where it kind of goes off the reservation and does some weird stuff. So I wouldn't rely on it 100%, but it is another tool that we can use to help estimate the positioning when the T plus 0 line gets a little weird. So those are just some things and observations that I have with that. And like I said, I'm considering, or I'm looking at putting together some sort of a video on the whole situation here sometime this week. I want to be careful with how I word things because people can misinterpret things fairly easily at times. But that's basically what I'm doing with the option view right now, and that's the short of the situation. Either way, option view is supposedly coming out with a new model very soon, and we're going to have to see what that gives us and then make suggestions at that point, but I don't know what it is at this point. Do I think I will be shifting with O&E analytics at some point? Well, right now O&E uses the individual options on its own, and it essentially gives you the same as the regular T plus 0 graph in Thinkorswim, and that is not usually, again, it's very unpredictable and unreliable. If it's the only thing that you have, then you use it. Realistically, if you get really good at this, you don't even need an analytical graph. You should be able to manage your positions. But if that's the only thing that we end up having, then we will make processes to do it. I would not do it at this point. I know O&E is working with a beta version, and I've talked to him about it, and he's trying to work on something that is going to actually be representative, and I know he's working very hard to get something out, and we'll see where that goes. Hopefully they can get some sort of a model to do that, but as of right now, I would rather deal with option view in the variable model than go with an EI-OIO model. Which is, again, the basic model of O&E and the basic model in TOS, because that model just doesn't accurately predict what happens when price moves. Well, sometimes it does, sometimes it doesn't, but it's very inconsistent. So I would tend to avoid that. I still think you're going to see more consistency in the option view variable model, despite everything that's going on. The January M3 position, well, this is, okay, no, it wouldn't be this. January M3. And I'm going to just hop back to some questions and then try and answer them as quickly as possible. So that's what a January M3 position looks like here. Again, this is not on the, this is on the EI-OIO model. Let's go to the variable. That's what that position looks like there. Questions. I just have a lot of them here, so I'm going up. December rock. Based on that position, would I expect the rock? Okay, so he's just talking about the December rock position. Based on the December rock position, would I expect to do an M3 rock conversion not before 1200? Yeah, so if I go back to the rock trade for December, and I close this, by guidelines, I wouldn't do a conversion until we were over 1200, right? At which point you'd depending on where the market closed at the end of the day, we'd probably either be in the 1180, probably not the 1190, but possibly the 1190. If we get a shot way up into the 1210 area, we might be in the 1190s. And if we just barely tag 1200 and we decide to do it, we may even be in the 1170s. So it's a little bit dependent on where the market is when we actually do the conversion. But for right now, we wouldn't even consider it until the market's over 1200 at this point. So regarding the bearish butterfly, in the previous email I talked about, okay, yeah, so I did an email. If you look, I did a post in our blog in the community about doing iron butterflies instead of put butterflies. From a position standpoint, it doesn't matter if you do irons, calls, or puts. The iron butterfly is going to play better, as they say, or with the analytical tool in the EI-OIO setting. So if we're using this setting at all in our decisions, it may be beneficial or more beneficial to, especially if you're using the toss because you're not combining put and call skews. You can combine them in option view, or if you're using ONE and you're not combining put and call skews, you're going to get a more representative reading if you're in the calls with this upper long than the puts. So doing irons, if you're doing those types of comparisons, is going to be a little bit more beneficial to you, strictly for a modeling issue. In these trades here, the sample trades, we're doing them the same way we've always done them. We're doing them with the same settings we've always done them, doing them with the variable model. Therefore, there's no need to do that. There's not even really a need to do it anyway, but if you're, like I said, if you're going with the other model, you're going to get a more representative or less wacky T+0 line if you are in the calls with this out of the money option here. So in which case, yeah, go with the just go with the irons, or at least model. You can model the irons in that setting. T-log for December bearish butterfly. Yes, December bearish butterfly T-log. Right, this trade was entered at what, 1140 strikes. Then it was added to and rolled. We added the 1160 and we rolled to 1180, and that's where we are now. Okay. Isn't for the M3, isn't minus 50 to minus 100? Oh, plus 50 to minus 100 usually acceptable? Why do you intend to make an adjustment? Okay, so a lot of what we've been doing with the M3 trade, especially since 2013, is we've been doing minus 100 delta inside the tent, minus 75 delta at the edge of the tent, minus 50 outside the tent. There is an amendment somewhere in the guidelines in the course. I don't know exactly where it is. I haven't actually viewed the course in a long time, so I know it's in there somewhere. But yeah, I mean, your general guidelines are plus 50, minus 100. That's being essentially inside the main butterfly. You start getting outside the butterfly, you want to flatten out a little bit more, generally. Just a comment from Curtis, who's actually already left, is my biggest problem right now is that the back trader is all over the place. Delta-wise, it doesn't resemble data at previous adjustment points in live trades. Yeah, so sometimes you'll see this in option view. You'll get, especially if you're using the Thinkorswim, if you're using the Thinkorswim data feed, you will sometimes get different delta, or sometimes often get different delta live trading than you will at with the option view feed that they have, the option, what do they call it, the quote view. You'll get different numbers live, and that's because of the rate of speed at which the Thinkorswim updates the options is different than the rate of speed that quote view updates the options. And when you're in back trader, you're getting quote view quotes at that particular time. And of course, if you're live trading, you're getting toss views at that particular time. One way to overcome that is to make your decision point a little bit earlier using the back trader. So I can come in here and make a decision point at 1500. I can go into back trader and see what my delta was at 1500 and make my decision, and then adjust at 1530 time frame, or right around that time frame. For most of you, you may not know, you may not care. In other words, the delta is going to be different. I mean, you can use whatever you're seeing in TOS to make your adjustments if you like, but we have a trade debrief process where we use backtrader to debrief the trades, which everybody really should be doing, but most people don't know how to do unless you've taken one of my advanced courses. In which case it doesn't matter. But if you're doing your trade debrief process then, and you're using TOS quotes, then you're going to want to do something like that so that you can get your numbers so you can properly analyze your performance. All right. So I see there's a percent, but not the methodology of calculating it. You have course P&L numerator. Okay, so this is very important, right? What do you use for a denominator in your percentage of profits and loss? In our trades, we always have a number called planned capital, which is the maximum amount that we expect to get into the trade, or it's representative of a maximum amount we expect to get to in a trade, and we always use that for the denominator. So a lot of times in our trade, like even this bearish butterfly, for example, we only have about $27,000, $28,000 in this. When we figure our percentages and our returns, we're actually using $50,000 because $50,000 is our planned capital. So we're always using the planned capital of the trade for the denominators. And I believe that is all I have. Oh, I might have some new ones. Yeah, okay, all right, that's fine, thanks. The original question was about calculating annual return. All right, so annual return is the same way. We're doing annual, all these trades, the way we're doing them in the sample guidelines here is all these trades are consistent sized the whole year. So we're calculating annual return on our $50,000 planned capital within the trades. Some of these do overlap, and you do have to keep that in mind. When you look at account size, if we look at our sheet, I do calculate for that. So here, right, so one of the things we're doing here is we're saying this is our annual return on planned capital, right, which is the expected capital needed for the trades, right, and this is a composite, and this is our actual annual return corrected for reserve, or the entire account. So here we're doing 4 trades: bearish butterfly, M3, rock, V trade. We are doing $50,000 planned capital for each trade, which comes out to $200,000. We have $400,000 in the account, the sample account that we're using. So when we figure out our return here, we're going to have a return on planned capital. We're going to have a return on corrected for the entire account. These trades will never come even close to having near $400,000 in them. So realistically, this is much more than we need, but this is the way we're doing it for the sample. Okay, so hopefully that is that. Where are the old recordings? Right now we're recording. The recordings for this are located on the blog, the main blog at lockeinyoursuccess.com. Just go into the blog, and we have years of recordings there. When we come out with the new, well, next month, the recordings are going to be available to premium members for the first, I don't know, couple of weeks or something, and then it will go out to public domain after that. And of course, a regular standard member can watch the video live, but the recordings are going to be delayed unless you're a premium member. And what's the maximum amount? I'll go above red mid-price on a butterfly fill in the rut. That is a very, very subjective question, Will. My answer is it depends. Because I don't consider, if you've been, again, in the advanced programs, we talk about pricing and stuff, I don't consider mid-pricing the value of a position necessarily. So if I think the value is there, I might go $1, $2 over mid-price to get into a trade if I think the value is there. If I don't think the value is there, I may not be willing, I may be under, under a dollar under mid price. And in other words, sometimes mid price is supposed to so high, I don't want it in it. I don't even want to pay mid price. I might want to do under a dollar. That's something that's actually a fairly long discussion to do, but it's very dependent. Is that Excel spreadsheet available on the site? It is not at this point, but we're considering posting it on the site going forward, because we have them for years of returns. So, all right. I think that's all the questions we have. Plus, I have to get going. I have another webinar to jump into, which if you'd like to watch, you have to be an Options Tribe member. It's a $1.25 million live position that we cover that's on the trading desk. So I hope everybody has a great Thanksgiving, and we will talk to you next week.